Hey, this is Amit Mehta here, and today I want to do a second video about the topic of managing risk. Honestly, this is the most important skill you will have to learn from going from where you are right now financially to becoming a multimillionaire. Because here's the thing, there's a difference between making millions of dollars and keeping millions of dollars. Making a lot of money and then keeping it. And those are two entirely different things, because there are people out there who are really good at making a lot of money, but they can't hold on to it. And you don't have real wealth if you're just making a lot of money and you just lose it all. And so that's where the art of risk management comes in, is the ability to make the money, keep it, and then keep growing it. And the ability to make financially sound decisions throughout the whole process. And so let me start with a little bit of a story here. Now, most people in terms of risk management, in terms of risk management with their money specifically, fall into two categories. Most people fall into this category, and that is totally scared shitless of taking any type of risk. They're scared of starting a business or investing money or whatever, because they might lose it all. They're really, really scared, and this is ingrained into most people since they're very, very young. And it's really hard for a lot of people to overcome. It takes a lot of working on your mindset and conditioning to overcome that. And then there's the other extreme where people are just foolhardy, downright, the other extreme where they're willing to take enormous risk without really thinking it through, without really balancing, the pros and the cons. So one example of this is one of my students quit a $20,000 a month job to do affiliate marketing when he hasn't made a single affiliate sale. $20,000 a month job he quit. Now that's the other extreme of risk management, where you're totally, jumping off a cliff. And you don't want to be in either of these extremes. You want to be somewhere in the middle where you take calculated, educated risks. You take calculated, educated risks, and the more of these that you take, the better you get at, and then the more educated you get, the more experience you get, the amount of risk goes lower and lower and lower. So when you first start your business, the amount of risk might be this much, but as you gain more and more experience at doing it, it goes lower and lower and lower to the point where the next business you start, or the next year of your business, is going to be that much more successful and that much more assured of your success. Now, of course, a lot of businesses go under because they don't make the best decisions. And that's where I want to talk about financial risk. Now, here's the thing with financial risk. You want to balance low risk and high risk. So if you have a business, like for example, I have a business, and that is like my high risk component of my income. Now the income, the excess cash flow I make from my business, I want to put into something low risk. Something that's going to pretty much, my money will be safe. And I want to protect that with a trust, with insurance and different legal measures as well to protect my assets on top of that. So to minimize my risk. Because here's the thing, like what some people do is they make a lot of money with maybe a business, and then they'll put that money into something really risky, maybe like Forex or stocks or whatever, and they'll end up losing everything. So you don't want to leverage something that's high risk with something that's high risk. You want to leverage something that's high risk with something that's low risk. And that could even be, real estate, well-chosen real estate property, could even be a low-risk investment if you do it right. Or it could be like, some type of fund where you get like 5% return or whatever. So you want to make sure if from whatever your portfolio is, you have something that's high risk, maybe like a business, generating the income, and then putting that into something that's low risk. And that's the best way to protect yourself. And having trusts, I'm not a lawyer, so disclaimer right now, I'm not a lawyer or a legal person, but look to a professional for more advice on how to do trusts and protect your assets and everything like that. So that's another thing in terms of investing. And the other thing is cash flow. When you have a business and your business is growing, you're doing really well, there's that tendency like, hey, let me just keep reinvesting this cash flow and expanding my business, growing it really fast, or taking it out and buying a big house and buying a nice car. You want to make sure you have a little bit of a cushion in your business, because you might be doing really great this year, but you might have a bad year next year, or the economy might go down, or certain circumstances might come up or whatever. So you want to make sure you keep a little bit of a cushion for a rainy day to minimize your risk. So if your business is generating, $20,000 a month, don't take that $20,000 a month and just, towards your living expenses. Don't have a $20,000 a month lifestyle. Have like a $6,000 a month lifestyle and bank the rest. And reinvest part of it back in your business and bank the rest. Keep some in those low risk investments that you can pull out if a rainy day ever comes. So that's a little, and it's about managing risk effectively, and it's a skill. And the more you do it, and the more you understand it, the more you learn about it, the better you're gonna get at it. And that's really the key to consistently growing wealth year after year after year. Hope that helps.